traders, Raghee here, and in tonight's free video we're going to talk about the Aussie. So earlier Wednesday we had the miss on the, if you take a look right here, wholesale sales number, big miss. And that in the morning, Wednesday morning, helped those short loony positions that we had, long positions in the dollar Canada and long positions in the pound sterling versus the Canada. Then last night we had the Chinese HSBC flash manufacturing, which was not a huge miss, but it was a miss. And that sent our Aussie lower, and that puts two of the positions that we have, which is the Aussie versus the Kiwi, which is right here, and then the Aussie versus the US, which is right here. So that's really the only exposure we have to the Australian dollar. Let's take a look at what is shaping up on those two pairs in terms of the downside, because these two pairs have been kind of hanging up, defying gravity, and we were just waiting for the price-based technical exhaustion to have a fundamental reason for the sell-off. And it's interesting, I had a buddy of mine who was on CNBC today, and he was having to defend himself in terms of his technical analysis and his chart analysis against a trader who was admittedly very fundamentally based. And the fundamental trader just didn't seem to get through his head that it's not the technicals that we technicians or we chartists, or I consider myself a chart hacker, it's not the technicals or the price action that we think is literally the reason for the movement. It's how we measure. It's the metrics of the market. It's the psychology that we're measuring with that price. So it's not price that's causing the movement necessarily, although sometimes when we run into major psychological levels, order flow can create that. But what we're doing is we're letting price set up the trade, and oftentimes it's the fundamentals that ultimately is, if you want to think about this in a metaphorical way, the dam break. Okay? So we were looking for exhaustion in a fairly wide range, 108.50 to 109.55. So about 105 pip range. We know that the 109 handle from a price action based level, this is based on price action, was keeping the market in check, keeping it from moving higher. Now, fundamentally, I think the Kiwi is stronger than the Aussie. Or conversely, I think the Aussie is weaker than the Kiwi. But we needed a reason, and that reason came by way of course, at HSBC, that very slight miss. We had a nice move down lower. And I'd like to see the 108.50 level hold here in the near term, and we can get possibly another nice push to the downside. Another great setup, again, another fade, moving up into an overbought level, was the Aussie versus US. We finally had some really nice follow through here as well from a overbought resistance area of about 90.30 to 90.80. So again, the technicals are showing us an overbought stochastic. The price action is showing us that we have a near-term ceiling here, and all I was waiting on now was a fundamental, again, that dam break, if you will. So there's three avenues of analysis. We talk about all three in the chat room, and when we set these two trades up as charts of the day, because we are short both of these pairs, we did so understanding all three avenues, knowing that technically we were overbought. Price action wise, there was a nice cushion of resistance in that 50 pip area, and then we were waiting on the fundamental catalyst to show that the exhaustion that traders were thinking would happen here would have a reason to move down lower. And that's ultimately what we had. So now in this situation, we're waiting for movement down through the 9,000 level, and if we can continue to see some US dollar strength, I think that's definitely something that we could see more downside in. Now the US dollar is still having a very difficult time with the 80.50 level, but that doesn't mean that I don't trust that 80 to 80.20 area as resistance. But one of the things I mentioned this morning in the chat room in the morning recap, for those of you that took the fade on the Euro US, number one, congrats, some decent pippage there, but number two, a warning, and I'm warning all of you here in the free video as well, because I think it's just that important. The Euro US dollar is a honey badger right now. The Dow is a honey badger right now. What do I mean by honey badger? I'll talk about it more in the premium area, but let's just say from a relative strength standpoint, these markets just don't care that they quote unquote should be going down. How do you handle these markets? We'll talk about that and more in the premium video. Have a great night, everybody.